Hello and welcome to this edition of Mic'd Up with iCM. My name's Pete Seyler, a member of our business development team here at iCM. And today I'm joined by Philip McInnis, Chief Investment Strategist of Avantis. Philip, thanks for joining us.
Thanks so much for having me. It's great to be here.
Great. Well, I'm really looking forward to our conversation today. And I'd like to jump in with a quick question about, from a high level, can you talk about your process and how you apply it to large value stocks as a recent addition to our models? Our viewers would love to hear from your perspective, how you view things.
Absolutely. Yeah. So at Avantis, what we're really trying to do is sort of take the best elements of indexing that makes sense. So things like low costs, broad diversification, transparency, tax efficiency. So we care about all those. Those are going to be hallmarks of the strategies that we manage. But at the same time, we think we can do a little bit better than market cap weighting, right? So that gets into this concept of identifying value, right? What's the best way where we can kind of identify value as we're comparing stocks and selecting securities? And so for us, it's really important to be considering information from all sides of the equation, from the balance sheet, the income statement of cash flows perspective. Because, I think if you look at maybe some indexes, other systematic strategies that you see out there, they may tend to have a bias toward just sort of what I'll call cheap companies, right? Companies that are trading at a low price. And from our standpoint, it's just as important, right? Just as important to consider what's the ability of this business to generate cash flows, right? What are the profit? What's the profitability of this company? So when we think about kind of looking at a universe of large cap stocks, we want to again consider that whole set of financials. So understanding not only the price multiples that things are trading at, but what's the cash flows and the profits that are being generated. And if I've got sort of a dollar to invest, in a company, what's the way that I can maximize that share of equity and share of profits that I'm getting for that dollar? So we really think it's a little bit more modern or complete way of thinking about value. And we can kind of, again, combine the best elements of indexing along with that potential for outperformance, which is the reason why we're here, right?
Yeah, absolutely. That's really interesting. Now, from your perspective, what advantages do you think that this offers over kind of the traditional market cap weighted strategies or those other a factor type of strategies?
It's a great question because there's so many choices for investors out there today, right? You look at, a Morningstar peer group or whatever else, and you're going to see, dozens, hundreds of line items of things that are attempting to do something similar. They have the same labels. And so from our standpoint, it's really important to look beyond the labels to understand what's going on underneath the hood here, right? Because if you take an extreme example, right? If you look at just market cap weighted indexes, some of the largest ones that have ETFs and funds that track them. So a Russell 1000 value index or an S&P 500 value index, or even a CRSP US large value index. What you see is that there's a lot of different decisions that get made as far as what constitutes a value stock, right? Or how they rebalance or reconstitute. And that has an impact for whoever's managing a strategy that is trying to track that index. And so kind of when we think about our approach, right, if you think in more of a factor world, or if you think in, kind of with I'll say, tongue in cheek with one eye sort of closed, I'm only going to look at the balance sheet of the company to say, is this a good deal or not? That's what some of these indexes are doing, right? And some of these factor shops are doing. And in our mind, as an investor, that's never something you would do, right? You need to be able to consider both sides of the set of financials to get the full picture of what this company can offer. And so I think that's one of the biggest competitive advantages that we have in our strategies, this idea that we think about all that together in a very, I think, elegant and integrated fashion. And then the other piece of it, Avantis is a bit newer of a sub brand inside of American Century Investments. So we've been around since the first strategies we launched were in September of 2019, but we've seen really strong adoption across the strategies. We're now, right around 25 billion in total assets here, sitting in June of 23, working with a lot of advisor teams and everything else. And so I think what we have is all the benefits of sort of scale and the long history of American Century, a great organization, but we have sort of the nimbleness of a firm inside of there, right, at this sub brand where we've got a specific way of managing money and a really specific way of trying to support advisors as they're sitting in the seat as a portfolio manager for their clients. So trying to combine a good portfolio with a good sort of support offering behind it.
Great. Really tremendous insight. And one last thing here for our conversation today. From your perspective, why do you view today as we sit at the beginning of June. Why do you view it as a good time for U.S. value in particular, and even more importantly, a strategy like yours?
Yeah, so, long term, I'm a big believer in valuations, right? Valuations are big determinants of future expected returns. And so that's what I tend to pay attention to. Now, there's a lot of noise in these things, right? So things can continue for a period of time. You don't exactly know when things will turn, whatever else. But if you look at something as simple as just the spread in valuations between, say, a large value index like the Russell 1000 value and a large growth index like the Russell 1000 growth, right? It's pretty darn wide. And if we look even year to date so far this year, you've seen pretty significant multiple expansion on the growth side of things. So large growth stocks have done really well, right? They've done really well. Sort of surprising to some people, but when you look at those, price to earnings ratios, price to book ratios, some of those fundamental measures, it's multiple expansion. It's not that the fundamentals are improving, it's that they're getting more expensive relative to those fundamentals. And so from my standpoint, that's not something that can continue forever. And so if you look, so far this year, you've seen a spread in performance between, again, Russell 1000 growth and Russell 1000 value greater than 20% through the end of May, which is it's a big spread, right?
So a big
So
reversal.
yeah, so that idea of, is there the opportunity, right? I'm going back to valuations. If something's traded at a lower price multiple relative to the right fundamentals, the correct set of fundamentals, we think that that has a higher expected return, and that's where we're going to continue to focus on our knitting, kind of stick to our process. But from my standpoint, when you see those things are really wide, what you tend to see is over the subsequent, say, 5 years, we've done research on this. Over the subsequent 5 years, you tend to see that premium for value relative to growth tends to be wider than historical averages. Again, there's a lot of noise in that, so precisely timing that is not something that we're big proponents of recommending. It's the idea that just keep
Sure.
a consistent focus on it. But as far as a why now, they're pretty darn wide. And so from our standpoint, it's as good a time as any to be thinking about this and how you're allocating between traditional growth or traditional value stocks. But the nice thing about our process underlying is that because of this emphasis on profitability or quality in the strategies, then we've held up even better than a lot of the market cap value indexes, even in this kind of environment.
Great. Philip, I can't thank you enough for joining me today. Naturally, our viewers are going to see what a great addition you guys are to our portfolios. Thanks for joining me. Appreciate your time. And as always, if you have questions that need answering, please don't hesitate to reach out. We can be contacted at ICM info at icm-invest.com or at 888-426-4689. Philip, thank you, and
Thank
we'll
you,
see you
Peter.
next time.
Appreciate it.